Now, earlier this week, the Reserve Bank Board cut interest rates for the first time in 2.5 years. And there are also reports of a slowdown in property markets in all capital cities over the last year.
Triple J's Hack program has been asking their listeners whether that means now is the right time to get into the housing market. Tom Tilley is the host of Triple J's Hack program, and he joins us from the Sydney suburb of Pyrmont. Good morning, Tom.
Morning, Michael.
Now, the Sydney market has been fairly steady of late, and I suppose that's not such a bad thing for many potential home buyers.
That's right. Compared to the last 10 years where we've seen massive price rises in the housing market in Sydney, it is really good news. And the other good news for people all around Australia in capital cities is that we've seen a 2.2% decline in median house prices across capital cities. So for young people, that is really good news. For home owners, that might not be so good. But it's been a nightmare for young people trying to get into the housing market. And if you look at these apartments behind me here in Sydney, you wouldn't get much one-bedroom apartment for $400,000. So this week's rate cuts, along with the steady and declining house prices, is really good news for young people. So they're starting to ask themselves again, maybe it's time to jump in. And with me now, I have a 22-year-old would-be property investor, Miriam Eryan, and she's really keen to get into the market. Do you think now's the time for you, Miriam?
I think now's the perfect time for anyone to start investing and to pull out the real estate classifieds and look into getting property. Reason being, where prices were soaring, they're finally steady. And buying property is all about timing, and timing feels right for me now.
And have the Reserve Bank's interest rate decisions, the cut this week, impacted your decision?
They don't make a huge impact on my decision. They're not a deal breaker on whether or not I will invest, but they do motivate me to get into the game sooner because there's a playing field now where prices are lower, where interest rates are lower, and hopefully I'll get a good return from that investment.
Okay, so Miriam will be out there pounding the pavement looking at properties this weekend, but I have someone with me who's a little bit more pessimistic. He's a researcher of economics for the Centre of Independent Studies. His name is Adam Crichton. He actually worked for the Reserve Bank as well in his previous work history. Adam, not so positive about the property market?
That's right. No, I think the interest rate situation and the house price situation is still pretty volatile. So on the interest rate front, just a few months ago the Reserve Bank was suggesting that rates may actually go up, and also inflation is still above 3%, so there's a strong chance, I think, that rates could actually go up again. On the house price front, Australian houses are extremely expensive. In fact, they're probably the second most expensive in the world after Hong Kong, if you look at the ratio between median house prices and also median household income. That ratio is about 7. So I think those the modest falls we've seen so far could have some way to go.
Okay, so Adam, you're not getting into the market yet. How much of a downfall are you waiting to see before you would get in?
Well, I'd like to see a few more years of flat prices and just let inflation steadily erode the value of property before I get in. Yeah.
Erode the value of property, not music to the ears of property owners. There you have it. So two different opinions. One, I guess, carefully observational there with Adam, and very positive with Miriam.
Tom Tilley from Triple J's Hack program, always a pleasure to speak to you. Thank you. Now,